Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial world of CEA Industries. And let me tell you, after reading this report, I'm starting to think they should rebrand to Creative Accounting Enterprises because things are about to get interesting. First off, if you appreciate getting straight insights from corporate filings, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss these filings with others. CEA Industries filed this report, also known as an 8K form, with the Securities and Exchange Commission, or SEC, on June 6, 2025. An 8K is a report companies file to announce major events to their investors. So, what big news did they have to share? Well, it looks like CEA Industries made a deal with Velocity Investments Incorporated for advice on buying Fat Panda Limited. Now, Fat Panda is a Canadian company that sells nicotine vape products. Basically, CEA needed help figuring out if buying Fat Panda was a good idea. Velocity gave them the thumbs up, but instead of paying Velocity in cash, they paid them with stock in CEA Industries. The value was estimated to be CAD 700,000, which translated to 39,000 shares of common stock. At the time the shares were given out, those shares had a market value of about 313,950 in United States dollars. It's important to note that the value can change based on the market price of the stock. Alright, that's the main event, but looking at the exhibits to the filing, there are some additional agreements worth noting. These are related to the agreement to have Velocity Investments help them with the deal. There's the original agreement with Velocity from February of 2025. Then there are two updates known as amendments to that agreement. Amendment number 1 to the agreement and amendment number 2. These amendments probably contain specific changes made to the original agreement, but without digging deeper into each one, we can't know the specifics. Finally, there is a legal opinion from the law firm Gollenbach, Eisman, Assor, Bell and Pisco LLP. This probably talks about the legality of the stock being issued. Now let's take a step back and look at the bigger picture. CEA Industries is venturing into the Canadian vape market by buying Fat Panda. They use their own stock to pay for the advice needed to make this happen. So what does this all mean? Well, on the surface, it seems like a straightforward acquisition. CEA is expanding its business by buying a company in a related industry. They are using stock to make it happen. Here is my take on all this. Paying for services with company stock can be good or bad. If the stock price goes up, it's a cheap way to pay. If the stock price goes down, it becomes a really expensive way to pay. This happens because the amount of dilution to existing shareholders will increase to meet the originally agreed upon dollar amount. It really depends on how well CEA performs as a business ex-ting. In closing, always look at the fine print, but more importantly, look at the bigger picture. Alright, that's our breakdown of CEA Industries' latest filing. What's your take on these moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.